Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your financial market review for this trading day of Monday, the 31st of July, 2017. We're about 3:40 p.m., 20 minutes away from the close, but I got things to do and it's going to be a quiet 20 minutes here, so I wanted to get this done. To put it mildly, the market's going to focus tomorrow on Apple earnings. The market is expecting decent earnings, but it's the forward guidance, especially concerning the iPhone 8 delivery date. We hear a lot of problems in the manufacturing and delays because of it. The market will focus on that. You can see the dollar continues to fall. We still have the chaos going on in the White House. Anthony Scaramucci, the White House Director of Communications, boy, that tenure was over. As soon as he opened his mouth up to the New York Times, it was pretty much that it was going to be over. And once you brought in somebody, not like Rance Priebus, but more like John Flynn, that Marine general, game over. And the rules are being set. To see the president, you got to go through the chief of staff, the way that it's always been. So a whole different world's going to come out there. But what this market's going to focus on is, like I said, Apple, other earnings. We're getting a lot of economic data in the morning, and jobs data on Friday. That's going to be a real big number that the market looks at. If you take a look at the weekly chart of the NASDAQ, we're in a small corrective mode. We've been here, done this. It did make a new high. It's backing off. There's certainly nothing bearish on the chart. You'd have to, in order to scare this market, get way down here under 56, 52.75 on the weekly chart. I don't think it's done that at this point. What did scare the market on the daily bar chart was this big outside day down on Thursday, and now you've had 2 days in a row where the market has tried to bounce a little bit, really not doing anything. It will be very interesting to see if the market can get under this 58.50 area. What does happen there? Does the market break down because you had this straight up line without a correction, if you remember? I was even mentioning how many days of higher highs the market had made. Is it going to eat into that at all? That'll be a question to look at. You've lost your way in terms of a trend. Now, what do I define as a trend? An uptrend has higher highs and higher lows. A downtrend has lower highs, lower lows. No trend has this. You've got a high that's higher than a previous high and a break low under a previous low. If the market were to rally straight up now and go through that high, you'd still have a lower low and a higher high. However, if you do not take out today's high tomorrow in any manner, you will end up with lower highs and you already got the lower low. So that is something to think about. The market's going to find it easier to develop a downtrend in that pattern. The support of the market comes in at 58.39.5, and that's been called for ever since you lost the embedded reading, and I'll show you that in the chart after this one, which is our Bollinger Bands, where the market got up just about to it right here and then backed away so much that now the market is at the other end of the cycle pulling back. When you lose an embedded reading, and if I can get here, if you take a look at this loss on Friday, this is Friday's loss. When you lose the embedded reading, price and the 18-day average often come together. Now, the longer it takes, the higher that's going to happen when a market was in an uptrend, because typically the 18-day average has to travel up to it. If it happens in short order, it's a combination of price coming down and that average trying to come up, and that's just what you've got here, and you'll probably see that average move up for you tomorrow. When we come over to the S&P 500 index on the daily bar, you don't have a trend here either. You got that higher high, lower low. But unlike the NASDAQ, you're still with an embedded reading, so the pros are still buying this market. Doesn't mean you can't go down to the 18-day average, but as long as you keep that reading where both numbers are over 80, that stays very bullish. Where the markets got weak, or actually strongest, I should say that first, I thought this was the Russell, was the Dow's the strongest. It's got an embedded reading. It just keeps moving up the 30 stocks that make this up in their own world at this point, whereas the Russell 2000, the biggest of the indices we're watching, well, take a look at this. Lower highs, lower lows, under the 18-day average. This market has entered bear territory. You had an outside day down today, so what I watch is today's high. As long as that is not taken out, there's more free sailing, as I call it, to the downside. Take that out and you lay what's called a bear trap. And that would be interesting if it happened right against the 18-day average of closes. But right now, this market's still looking bearish. The resistance today, that 18-day average of closes, which was around 1427.80 when I was watching it, now it's at 90. It moves back and forth. In the VIX, as I said, you had the embedded reading. You did make a new all-time low. You bounced away to the 100-day average, and now you're falling back against the 18, trying to figure out what to do next because you're not trending. You have a lower low and a higher high, and then early on we tried to make a higher high because of the unchanged settlement. If that's where the market settled, I have to move this other arrow down. But I couldn't tell it one tick difference, and I'll wait for the official close. I haven't seen it myself. When I come into the bonds, look at how the battleground has shaped up at the 18-day average of closes. Very difficult. You have a lower low, a higher high from today, and you're just hanging there. This market's going to probably not do an awful lot this week until we get to Friday's employment data, and that'll set the market loose for the next couple of weeks minimum as the market starts focusing in on what August numbers will look like and the next Fed meeting in September. In the 10-year notes, as you can see, you fell back all week long last week to that 18-day average. You haven't moved very much away from it today. Momentum's trying to point down, even with the bias to the upside since you closed over the 18-day average. But the swing line's down. There's no trend to trade that I can see right there. What does have a good downtrend is the dollar. It continues to make patterns of lower highs, as marked by my arrows, lower lows, riding the Bollinger Band when you have an embedded reading. That's all quite bearish. In the euro currency, you went up to the upper parts of the upper Bollinger Band. It's a flip-flop of the dollar. Embedded reading, straight on up and doing a great job. You know, this chart I brought up because one of you asked me to do that last week. If you have charts you want me to cover in any of my videos, put out a message on Facebook. I'll read it there and see if I want to bring up that chart or not. It's got to be in the futures markets. I'm not going to do stocks. I do those if you bring me the symbols in my live webinars, which I'm getting ready to begin in the fall again. I like to take the summer off, but then we'll begin them up again. We'll do them more often than we did last year too, I think. But as you can see, the market just plugging away here. Higher lows, higher highs, still looking pretty good as I see it. In the Japanese yen, we've got the pattern of higher lows, higher highs, embedding. Now let's see how many days. Both numbers are over 80 today. You need 3 in a row to be embedded. On Friday, both over, but not Thursday. So tomorrow's the big day. The odds favor it won't embed just because you typically don't. Doesn't mean that you can't, but you typically don't embed. In the crude oil market, we're embedding here. Look at this. Both numbers over 80, both numbers over 80, and the day before. So you got your fully embedded reading. I thought you'd see more hedging here. Boy, that wasn't right. The market just moving up. Hedging is not selling short for speculation. It's locking in money that you can go out and produce your oil at. So I think that's what's going on. Could this market go up even higher than this? Well, you know, the old high was near 54 if you look on the chart back here. 52 is another number right here that I thought that the market would have trouble with also. We'll see if we can get up to those numbers. But it looks to me as though that's part of it. I saw today that the U.S. did slap sanctions on the president of Venezuela. Now, I've heard nothing about oil sanctions of any type on the country, but those sham elections that apparently went on, not sitting well. And I don't think it's just the U.S. that's doing this. It's country after country, including South American other countries. So that's good news. It's not the U.S. bossing the world around. In the September gasoline, up and over. So you got 1, 2, 3. I don't know if this day closed over the Bollinger Band. That one did. This day closed at 159.44 to 30. That's it. This day did not. So you got 1, 2, 4 days in a row where you're over it. What are the odds? The odds are that you're going to pull back by tomorrow or the day after. 5's typically the maximum amount before the market pulls back. However, this is a sign of great strength in the market. Remember that whenever you're embedded and you're riding that Bollinger Band, it's strong. New lows for the year in natural gas. So the summertime heat, this market is saying, no way. Yearly lows, contract lows. Pretty bad chart if you look at that. You know, I'm going to write a report this week. I'm going to start it tomorrow on gold. I'll have it done by the end of the week. If you'd like to sign up for it, we're making it available now on our website. You can either call my staff. You can go to our website to sign up for it, of course. You can always click up here if you're watching me on YouTube, or underneath us on many websites it says click here for Ira's free market information. And it's going to include the daily charts, the seasonal charts, the weekly charts. I'll try to put price counts in there. So instead of writing a longer term report like I did last time, which so far has proven to be okay, I said the market was going to be stuck in the area of the 18-month moving average of closes. You take a look where you're at. You're there. So now the question is the weekly and daily charts, and I'll really move you off center with some of that thinking. So let's see what happens. I'll begin it tomorrow and talk about it during the week, but you want to sign up for it to get it. I'm Ira Epstein. You have a good day, and I will talk to you all tomorrow. Take care now.